Buying a home is exciting, but it's also one of the biggest financial decisions you'll ever make. And the problem is, almost nobody tells first-time buyers the mistakes that quietly drain their bank accounts. You don't see these pitfalls until they hit you, sometimes months or years after you've signed the papers. These are the mistakes that can cost you thousands, even tens of thousands of dollars, if you're not careful. In this video, we're going to break down the hidden traps in the housing market that first-time buyers and even some experienced buyers fall into. We're talking about overpaying, bad timing, underestimating costs, ignoring local market trends, and falling for flashy deals that look good on the surface but are financial landmines underneath. By the end of this, you'll know exactly what to watch for, what questions to ask, and how to protect yourself so you don't leave money on the table. Or worse, get stuck with a home that drains your finances instead of building your wealth. Let's start with the first big mistake that so many people make. When people step into the housing market, they often think the only decision that matters is picking the house that looks good and signing the papers. But the reality is, the financial battlefield of real estate is filled with invisible traps that can silently drain your bank account long before you even realize it. One of the biggest mistakes first-time buyers make is overestimating their own budget without fully accounting for all the hidden costs. They focus on the down payment and the mortgage, which everyone talks about endlessly, but rarely consider taxes that keep rising every year, insurance premiums that fluctuate, utility bills that aren't included in the listing, and the small creeping costs of maintenance that suddenly appear as soon as you move in. A leaky roof, a faulty water heater, or even just an old HVAC system can quickly turn what looked like an affordable purchase into a financial headache. The people who fall for this trap think they're ready for homeownership, but they've underestimated the real monthly commitment. Another critical mistake is ignoring local market trends. Buyers often look at national headlines or social media hype and assume that if the market is hot somewhere, it's safe everywhere. That's a dangerous assumption. Real estate is hyper-local, and even neighborhoods within the same city can behave completely differently. You might see a nationwide boom, but if the area you're buying in has declining employment, low demand, or a shrinking population, you could easily end up overpaying for a home that will struggle to hold its value. This is where research becomes your shield. Studying school districts, local economic indicators, upcoming developments, and crime rates can save you thousands by avoiding a poor investment that looks perfect on the surface. Timing is another silent killer. Beginners often think there's a perfect moment to buy a house, and they sit and wait for rates to drop or prices to fall, only to find themselves beaten to the deals by investors or frustrated by rising interest rates. On the flip side, rushing into a purchase because of FOMO, the fear of missing out, can be just as damaging. The buyers who end up making the most money in real estate aren't the ones who try to time the market perfectly. They're the ones who buy when they're financially prepared after doing their homework and with a clear understanding of what the property costs them every month. Financing mistakes are equally devastating. Some buyers assume that any mortgage approval is good enough, without realizing how interest rates, loan terms, and hidden fees affect cash flow. A property might seem affordable with a low monthly payment, but adjustable rates, balloon payments, or prepayment penalties can sneak in and wipe out your savings before you even settle in. Understanding your mortgage completely, every term, every potential spike, and every hidden cost is crucial if you want to protect yourself from losing thousands later. Then there's the emotional trap. Falling in love with a property can cloud judgment. When buyers see the perfect kitchen or the dream backyard, they forget to calculate if the investment makes sense financially. They gloss over needed repairs or accept overpriced listings because they're imagining themselves living there, not thinking about what happens when the bills start piling up or when the market shifts. Homes are emotional, but money doesn't care about how much you love a granite countertop. That's why separating emotion from calculation is one of the most powerful skills a first-time buyer can develop. Because failing to do so is a mistake that silently bleeds money, month after month. Another major pitfall is underestimating closing costs and transactional fees. Buyers often think the down payment is the only upfront cost, but closing fees, agent commissions, inspection costs, and legal fees can add thousands on top of the purchase price. Miscalculating these numbers can force buyers to scramble for cash at the last minute, sometimes resorting to short-term loans or high-interest credit to cover gaps. That's not just stressful, it's costly, and it's entirely preventable with proper planning. Finally, many first-time buyers ignore the value of planning for the unexpected. Life is unpredictable. repairs happen, interest rates rise, market conditions change, tenants move out if you're renting. Without a buffer in your budget or reserves set aside, even small, routine expenses can turn into a financial crisis. Successful homeowners anticipate these risks and embed them into their calculations from day one. Mistakes happen when buyers assume a perfect scenario will continue indefinitely, and the reality is, the housing market doesn't operate on wishful thinking. The bottom line is this: the housing market is full of traps that quietly siphon money from unprepared buyers. Overestimating your budget, ignoring local trends, mismanaging financing, letting emotions take over, underestimating closing costs, and failing to plan for the unexpected are all mistakes that cost thousands. What separates someone who loses money from someone who thrives is preparation, research, and the ability to see the house not just as a home, but as a financial decision. Every dollar matters, every decision has consequences, and if you're not aware of these mistakes before you buy, they will find you eventually. Now here's the part most first-time buyers completely miss: the subtle ways the market itself works against you if you don't understand it. It's not just about making mistakes on one property. It's about how patterns in pricing, supply, and demand quietly influence your decisions. For example, you might see a property that seems affordable compared to the surrounding area, but if the neighborhood is oversaturated with homes for sale or the local economy is softening, that apparent bargain could end up sitting on the market for months, or worse, depreciating in value right after you buy. Many buyers assume that because a house is listed at a certain price, it must be worth it. But real estate isn't a static number. It's a living, breathing market that fluctuates with interest rates, buyer sentiment, and economic factors that you might not notice unless you're actively paying attention. Another hidden trap is the illusion of instant equity. People hear stories about buyers walking into homes and immediately having tens of thousands in equity, and they think that will happen to them automatically. But the reality is that appreciation is rarely linear, and it can take years to build significant value. Meanwhile, holding costs, repairs, and unexpected expenses quietly chip away at your finances. If you buy without calculating these factors, you might find yourself underwater before you even realize it. That's why learning to read the market like a professional and not just relying on hype, trends, or glossy listings is essential. Then there's the temptation to overimprove. Some buyers make the mistake of spending heavily on renovations or upgrades immediately after moving in, thinking it will boost value. While strategic improvements can pay off, overdoing it, or focusing on cosmetic changes that don't matter to buyers or renters can drain cash and delay your ability to recover financially. Understanding what truly adds value versus what just looks good is a skill most first-timers don't have. And it's a costly mistake when learned the hard way. Even negotiating the deal can be a silent money trap. Failing to negotiate repairs, closing costs, or contract terms can leave you paying for problems you didn't anticipate. It's not just about the price you see on the listing. It's about understanding how to structure the deal so that risks and costs are shared appropriately, and so you're protected when the unexpected occurs. Many buyers skip this step because they feel intimidated or don't realize it's standard practice, but skipping negotiation is literally leaving money on the table. And finally, the mindset mistakes, the emotional decisions that quietly drain finances. Falling in love with a property, rushing because of fear that prices will rise tomorrow, or ignoring red flags just to secure a deal, these are all ways people end up overpaying or getting stuck in financial stress. Real estate isn't just about finding a home you like. It's about making a financially sound decision that balances your present desires with your long-term security. The buyers who succeed understand this balance, while those who ignore it often pay thousands before they even realize it. Understanding these mistakes isn't about scaring you. It's about empowering you. Every misstep you avoid is money you save. Every question you ask before buying is protection for your future. Every decision you make with knowledge, instead of assumptions or hype, puts you in control of your finances and your path to building wealth through real estate. So now that we've unpacked all the hidden mistakes first-time buyers make, the real question is, what do you do with this information? The truth is, knowing about these pitfalls is only half the battle. What separates smart buyers from everyone else is taking action before they step into the market. Planning ahead, running the numbers carefully, and approaching each property as both a home and an investment is what will save you thousands and protect your financial future. You have to treat the buying process like a game of strategy. Every cost, every local trend, every potential surprise. Consider it a move on the chessboard. If you ignore one, even something that seems minor, it can cost you hundreds or thousands later. Experienced investors and homeowners don't make decisions based on emotion, hype, or what looks good in the moment. They look at the big picture, the long-term implications, and they calculate how every decision affects their finances, their cash flow, and their wealth-building potential. That's the mindset you need to adopt if you want to play the housing market smartly. Think about it this way. The home you buy today is not just a place to live. It's a financial tool. Every mistake you avoid keeps money in your pocket. Every step you take to plan, research, and negotiate creates financial leverage. And every time you anticipate the unexpected, like repairs, vacancies, or shifting markets, you're turning potential losses into controlled risks. The difference between someone who ends up financially stressed in their first few years of homeownership and someone who builds real equity and cash flow comes down to these choices. It's not luck, it's strategy. That's why education, preparation, and patience are the real keys. Take the time to understand the neighborhood, analyze comparable sales, factor in every possible expense, and never underestimate the importance of having a financial cushion. The buyers who ignore these steps may not realize their mistakes until they've already lost thousands, but the ones who follow this approach walk into the market with confidence and control. They make decisions based on facts, not hype. They plan for the long game, not the Instagram moment. And most importantly, they protect themselves financially while building wealth steadily over time. My name is Real Estate with Pingo, and I break down the housing market in ways that are real, practical, and actionable. If this video gave you value, hit that like button, subscribe, and share it with anyone who's thinking about buying their first home or making a move in real estate. Because the truth is, the right knowledge applied at the right time can save you thousands and set you up for financial security for years to come. Remember, mistakes in the housing market aren't just learning opportunities, they're expensive lessons. Avoid them, plan smart, and treat every decision as an investment in your future.